So we were talking about technology developments, about the trends. We will be also talking about the trends, but slightly from the different perspectives, so the business outlook and the crisis. So on the edge of the change, how the influence of the crisis will impact the merchant payments ecosystem. Are we ready to kick off? So let me introduce my panelists. So first of all, Laura, Ralf, Nik, and Anders. Please welcome the panelists on stage. So we have a very good representation of different players in the payments ecosystem because we have Accenture, but we also have global acquirers and payment companies, JP Morgan Payments. We have some other geographies represented, so we have a local industry representative, although operating in other countries. So Germany-based company Computop, and we also have dLocal, last but not least, and which is payments company, active in many emerging markets. So definitely Andres will be sharing a lot of insights from the emerging markets. Unfortunately, we missed Yaacov Martin from Jifiti, because he couldn't make it today. His flight was cancelled. So unfortunately, we will be missing him. So just to kick off, because if you remember, for those who were in the morning session, I introduced the term polycrisis. So we can look at the crisis from different perspectives. And of course, we have this multifaceted or multiple factors involved. So like a geopolitical situation. We also have economic factors. We have climate-driven factors. So if you look at the dynamics, what was happening, the recent developments in the banking sector. So the question to you, do you consider the payments industry as stable and resilient? And I will start with Nik.
Yeah, and good morning, everyone. Great to see so many people here. Well, I think I'm going to start off with a quote, and it's a quote I heard this morning. It was from a gentleman called Dave Birch, and he said, "Payments work." So I think that shows that the answer to that is yes, and that's for a few different reasons. I think the industry is resilient. I mean, we've weathered storms in the past. Overall, and if you look at the proliferation of providers, the proliferation of partners, and ultimately the choice that's been given to consumers, I think we can look backwards historically and see that we've managed to weather the storm. So that shouldn't make any of us complacent. We're certainly not complacent because some of the challenges are new, but I think that sort of like the different aspects of provision that's there, that I think consumers do have a choice, and I think merchants ultimately follow the consumers and where they want to go, and I think that's absolutely key. And I think if we go back to consumers, it was a key aspect of the discussion this morning. In uncertain times, they're looking for certainty, they're looking for stability. So what does that mean for us? It means having stable platforms. It means concentrating on customer experience, and service, and making sure we have the right people to support them. So I'm very confident that we can weather the storm.
Yeah, so you're very confident. Thank you, Nik. So you're saying it works, that's it. Laura, would you like to add something to it?
Yeah. I would just say, I didn't even understand the question, because of course payments is resilient. I mean, I do take a long-term view. I am an optimist. I see that, yes, we're facing challenges, but actually to me, those challenges bring about innovation. Our payments are changing. You've got the scheme rails, the account-to-account rails, the blockchain rails, and I think that customers are more demanding than ever before. So I just see the future is massively rosy for this industry, as long as we are all willing to adapt to customer needs and adapt to the changing commerce trends, go into the metaverse and make payments frictionless and fast, frictionless, and instant, really, invisible.
Yeah, instant. Thank you, Laura. And you mentioned some challenges. So if I can dig deeper into it. So Andres.
Fraud. Sorry.
Oh, no, you can continue.
No, the big challenge I see is fraud. And so that's, again, something that we're going to have to deal with, I think, through really tightening up our methods for managing identity.
Okay. You also mentioned that we should adapt, or customers should adapt this kind of flexibility and, like, just flexible approach and very adaptive, responsive to change is very important to every industry, not only the payments. But over to you, Andreas, because we mentioned some challenges, and there are some challenges. So looking at your business, merchants payments business, what are the challenges, especially in the emerging markets?
Yeah, I mean, I'm going to stand on the opposite side of my colleagues. So speaking about the resilience and coming back to the first question, I think if we focus on the payment industry and the players within the payment industry, I think they are bound by the same rules as all the economic players in the economy. So I think if we are going to, or as we are seeing, we are entering, as the panelists called, we are in the edge of change. And I think we are going to see a new macro output with rising interest rates, rising inflation. I am the economist in the panel, so I'm the boring guy. Apologies for that. But I think many of the companies that started working or were founded during the past 10 years who leveraged on these interest rates that were close to zero, I think many of these, especially the ones that are cash flow negative, unprofitable at this point, I think we are going to see some losers in the game. On the counterpart, I think we have some very strong companies. Again, now I think I'm on the very same side as you guys. I think we are going to have winners. Economic cycles are very much, they happen all the time. Every 8, 10, 12 years, we see them happening. And this is pretty normal. And I think payments, as every other actor in the economy, we are not in another let's say, ecosystem than the other merchants.
Yeah, thank you, Andres. And you mentioned some macroeconomic factors like inflation, like rising interest rates. And talking about consumer behaviors, like a follow-on question, can you also, or do you observe also a kind of a shift in a consumer behavior, like shopping habits, or just alternative payment methods or payment rails that customers are willing to use?
If we frame these answers from an emerging markets perspective, I think we have one global event, which obviously was COVID, which drove change for all of us. I think the shift from cash into digital payments was almost a global event. But particularly in emerging markets, I think we have two very unique patterns going on. One is that governments are pushing for financial inclusion for all of the players within their economy, and we are seeing this, for example, in Brazil with the PIX project that was launched 2 years ago, and almost 120 million unique active users are using the platform. And I think a very important part within emerging markets is the fact that 90% of the population, which is 30 years or under, reside in these markets. So I think there is a very technological base drive, in the sense that we are seeing a lot of payment methods which are appearing in these regions, particularly in Asia. I think wallets are starting to proliferate a lot. So I think the patterns in behavior are changing and will continue to change in the near future.
Okay, thank you, Andres. And the same question to you, Ralf, because your company is mostly operating in DACH region, so basically in Europe. So what are your observations in terms of a customer behavior shift?
Well, I would share the view that the industry as a whole is stable. I agree on that. However, there are big shifts in user behavior, and we expect that to continue. Because obviously through inflation, obviously through everything that happened during the last year, the demand from consumers went down. So in just talking numbers in Germany, we can confirm numbers we've seen from other parties too. It's something like -8% in e-commerce. And so although the industry as a whole is stable, there are, for example, shifts we expect to go to BNPL, because BNPL is a solution that injects liquidity to the consumer. So there will be shifts within the industry, which is as a whole stable, But there will be cannibalization on different payment methods that help consumers over the issues they have with the fact that they have to spend so much money on energy and food and other things. There will be winners and losers. I agree on that too. I wouldn't like to be a startup these days, because the inflation will stay. So there will be difficult times. So it's now we're around for 25 years at Computop, but we will all need some breath for the upcoming time.
Thank you, Ralf, and thank you for raising BNPL. Buy now, pay later. I wanted to touch upon it anyways. And just with the changing macroeconomic climate, you mentioned inflation, and you said that it might increase liquidity or inject liquidity for consumer as a payment method. But I think on a flip side, with the rising interest rates, it can also increase the cost of the credit, and it will limit or it will basically expand the BNPL activities and growth. What is your take on that as a follow-on question? And maybe I will also direct this question to you, Nik, as well. So Ralf, first, if you have any comments, it will limit or it would expand BNPL growth. What do you think? The macroeconomic
we always recommend to our merchants to provide BNPL if they don't do that already. The interesting part is BNPL rose from being very popular in DACH to now being international all across Europe, even in the US. So the fact that this is available now is very helpful. So we recommend to go down that route, to offer it. However, over the course of time, you know that there are already discussions on getting BNPL regulated, making sure, like with a bank providing a loan, making sure that consumers are not overdrafting, I think is the right word to say. And especially we heard about from Mike at Worldline, we heard about the Gen Z, and what I find quite interesting is the generations that, having seen their parents struggling during the financial crisis, they are very reluctant to spend money they don't have. Yeah? So I'm a father with two girls, and so I think it's quite good that they are. However, if we now tempt them with BNPL to spend money they don't have, we kind of teach them, despite the merchants wanting to sell, which are my clients, we might tempt this generation to spend more than they have. And this is kind of a dangerous thing. We probably don't want that. So I think it's good that it's there, but it needs to be regulated. That's my position.
So you also mentioned this regulatory item, so regulatory push on top of it, so it makes BNP even more just complicated in the ecosystem. And of course, we have also new entrants because we have well-established players like big BNPL guys like Affirm or Klarna, but we also have some specialized local BNP providers. And on top of that, we have banks as well, just willing to play the same game, not even mentioning big tech and Apple, of course, with Affirm and some others. So Nik, over to you. What is your take on BNPL? Will be seeing a growth or will be seeing a kind of a slight decline in BNPL services?
I think it'll be a mix. I agree with a lot of what's just been said. I think that if you provide choice to consumers, intrinsically, fundamentally, that's a good thing. But I think the risks are inherent and need to be better understood. It's so early in that journey. And I thought it was an excellent, presentation from Mike before, talking about consumer behavior and youth, Gen Z, Gen A, and how they're looking at credit, how they're looking at debit. And that is something that I think regulation needs to take a real strong view of. But we can talk about regulation in an abstract sense globally. The reality is that this is broken down country by country and, sometimes region by region. So BNPL may work well in some markets in Northern Europe, but it may not be at all appropriate in South America, for example, or large parts of Asia. Not just because in of itself it may be risky, but there's other significant choices that they may have that may render BNPL redundant. So I guess in summary, I would say it is a good thing. I think we're going to see growth where people feel comfortable with it, and I think that there's strong regulation to make sure that when people embark on that journey, they feel comfortable. I think there's also a question about data, which I know was touched on this morning, and we'll talk about that a little bit more today, about how that data gets managed and the risks associated with that. And I think in other markets, it won't be quite as relevant. So it will expand in some areas, and it may contract in others, is my answer.
Okay, thank you. And coming back to the core of the merchant acquiring, merchant acceptance services, we touch upon this, but I would like to dig deeper into some changes that might be expected. So, Laura, in terms of the payment mix, in terms of the alternative payment methods, will we be seeing a kind of a shift again in the merchants acquiring services?
When I think of payment mix, I have to think about the types of channels that we see. So I'm seeing in commerce, you're seeing a massive acceleration in things like social commerce, super apps, conversational commerce we talked about earlier, voice commerce. So all of these things require embedded payments. They require embedded wallets to have native checkout. So one of the trends I expect is to see a shift towards embedded payments, native wallets within social commerce marketplaces, etc. And we're already seeing that shift beginning to take place, especially in other markets outside of, especially in the Asia.
Okay, especially in Asia.
But it's catching up. It's catching up in Europe, and then the US last. US is always last.
Okay, thank you, Laura and Andres. And yeah, the same question to you. What kind of shift do you observe, and how payments orchestration can be helpful in making this shift real?
I mean, if we speak about emerging markets, alternative payment method, it's a must. Given the low level of bancarization across the geographies, basically one of the strongest way for merchants to sell across these markets is through alternative payment methods. Again, I don't want to sound repetitive, but for example, the appearances of Pix in Brazil or UPI in India are two prime examples of this. Not to forget, for example, in Africa, the usage of M-Pesa, which is only used by the use of a cell phone, not even a smartphone. So again, technologies that adapt to the payment culture and the payment possibilities of the local populations, they are key. They are key to drive business. They are key to drive business abroad to these markets. And I think, again, always this notion of localizing the payment experience, I think it's for merchants that are trying to drive their expansion into emerging markets. I think starting with a strategy with local acquiring, but also taking into consideration these payment methods is of the utmost importance.
Yeah, Ralf?
If I may challenge you, Andres, when I look at the alternative payment methods right now, they are not all very comfortable, let me put it that way. And when you look at subjects that came up this morning, like payments over virtual reality, social payments, and so on, I think, and I think you mentioned embedded payments, then we need some, and I would agree on that, we need some invisible payments, but the alternative payment methods right now, they are not invisible. Well, I'm a fan of cards. I also like alternative payment methods. That's what we do in e-commerce at Computop. However, I believe right now alternative payment methods are not well positioned to be comfortably embedded into a good payment flow, while cards are. So beat me.
I definitely agree. I think it's important to have a notion of the reality of certain markets. Again, I think, coming back to this notion of the level of bancarization of, actors in some of these countries in emerging markets, I think it's key to understand that some of these markets are not comfortable. So we need to have these kind of payment methods to be able to access the total addressable market?
Yeah, just to address other users, and of course to make it's financially included. So basically, other users to use payments method. But it brings me back to the customer experience. You mentioned, Ralf, it's not comfortable, but of course it's not seamless or invisible enough. But we are very much focused on customer experience, how to make it seamless. And of course, I wouldn't agree with you. I understand that you're a big fan of cards because they are standardized, they are globally accepted. But I wouldn't agree with you on the point of that they are so easy to use, because digital wallets, some of them, imagine Apple Pay, for example, especially in certain channels like in-app, they are like one-click payments. They are so easy to use, straightforward, seamless, almost invisible. And also in case of some other digital wallets, you can say, oh yeah, the card, what is the underlying technology, or what is the underlying payment method? There is the card there, but still, like, there is a different interface we can play with, Laura.
Yes, I mean, you're spot on talking about the customer experience, and 69% of customers abandon their shopping cart at point of checkout, and most customers, as soon as they see a screen come up with them having to put in the credit card details, that's one of the key reasons they abandon the shopping cart. So what customers are looking for today, they're looking for a wallet that they trust. And there are way too many wallets out there. There's going to be a lot of consolidation, but they're looking for, an Amazon Pay or a PayPal or an Apple Pay, those types of things. And if they don't see it, a lot of them will say, that's it, I'm out.
Yeah, so you touch upon conversion rates, and I will just hand over to you, Nik, in a moment. Just one comment, because it's very important, the conversion rate, especially in the online, so e-commerce industry, and how to increase it, which is of the key importance for all the merchants. So of course, payment mix, and also the channels and the favorite, favorite or preferred payment methods. If customer can't find the preferred payment method, he or she will abandon the card, which is very crucial here. So payment mix and customer experience, and BNPL can also contribute to the conversion rate and to make it higher as it used to be. And of course, that was a selling line for all the merchants, not only in the old days by Klarna, but also other companies. Yeah. Now to you, Nik.
Yeah, that's right. I mean, and we heard it this morning. I think, repeat business is the holy grail, and people won't go back if they find it, difficult. And I agree with what, Laura was saying. It's like customers want it to be cheap, free. They want it to be easy. They want it to be quick, and they want it to be secure. And they're going to increasingly go to the place where they find that all of those things can happen. Now, beneath that layer, that data layer, there can be all sorts of things that can happen. As they say in the US, you don't need to make the sausage in front of the customer. They don't care. They just want it to work, And I think that the winners will be those that can consolidate and make sure that it is a very seamless, activity. And then, of course, there's some loyalty that comes from that as well. We heard about, points this morning. I think, the data security and loyalty is extremely important. So there will be a consolidation. But I think on the flip side, there will be some very niche plays, which I think some consumers will gravitate towards. There's a whole myriad of examples. I mean, talk about, connected cars would be a good example. Internet of Things, you go to your fridge. We heard about that this morning. You run out of milk. You can pay by fridge. You can order on your fridge and it will be there, later that day. So I think there'll be a consolidation, but there'll be these contextualized ways of buying that consumers will gravitate towards.
Yeah, very good, Nik, and thank you.
If I may,
absolutely, Ralf. Just to add
pay by fridge is only pay by fridge who you set what kind of payment method he should use, right, or it should use. And I think, having heard the discussion this morning, I think it's still important what kind of payment method a consumer is using for the car, or injecting into the car, into the fridge, and so on. And I believe that this is coming down to trusting it. So that might be the rise of the banks again. Yeah, we've seen a lot of challenges to banks with alternative payment methods, and a lot of challenges to cards. However, now with this embedded payments, I believe if I would have to make a choice, I would think, who do I trust? And it's certainly not No, I won't mention anybody. But I would definitely trust my bank, yeah, because I do so many. I may not trust them on the stock market, but I do trust them with regards to payments.
Mm-hmm. Yeah. So your point is very like much bank-driven and card-driven, which we had before, like a German ecosystem, although it's also cash-heavy. So, anyways, and I wanted to come back to your point, Nik. So thank you for bringing back this perspective of consolidation versus just new niche players. And I think we have this tagline from the morning when we mentioned some trends in the market, if it's like a consolidation wave of big players, Worldline and some other legacy with nets, and also maybe there is still room for niche players. So you representing JP Morgan Payments, needless to say, one of the, I think, second largest acquirer in the world. So what is your take? Is there still room for, you said it, yeah, you mentioned it, for like specialized, localized or local players?
There absolutely is. There absolutely is. You can approach it in a few different ways. I think geographically, I think there will be need for local provision, and people will go to who they trust. I mean, fundamentally, they'll go to who they trust and where it's more convenient, and then there'll be need for global players, and there's a whole myriad in between those two extremes, where the provision, can happen, but also in terms of, ingenuity. I mean, it's, you mentioned, the bank is central to what we do from a payments perspective. The head of payments sits on the operating committee. It's a central plank of our sort of like strategy going forward, but we see what's out there in the marketplace, and there are literally hundreds and thousands of providers who can get to consumers extremely quickly to give them what we need. And I think the blend of all of these things offers opportunity for all, and I think that's a very good thing.
Okay, and now I will give floor to Laura, on the same question. So if you're rather believer in this consolidation trend, or you still see this just new players coming and trying to disrupt the payments ecosystem, which is very difficult to disrupt sometimes. So what is your take on this?
I believe that partnerships are the way. I do believe that you need to have local, for example,
I can't agree more.
Yeah, so I love local payment methods, but I believe that you have so many different local payment methods. Let's say every country has their own, Bazoom, Swish, Vips, Lydia, all these different M-Pesa. And I believe that eventually these have to be connected, because there is a lot of cross-border commerce. Over almost 50%, right, of commerce is cross-border. So you need to connect them. I remember one of my friends at Ant, a few years ago, told me that their stated ambition was to be the world's largest Ant group, world's largest network of mobile wallets. Yeah. And they've been, creating partnerships with mobile wallets all over the world. And I think they probably have 15 or 20 by now. And they're going to connect them with blockchain. So that's the example of where you have a big company partnering with small local companies. And I think that's magic.
Yeah, it's magic. And I'm a strong believer and a strong advocate for partnerships between startups, fintechs, and incumbents. And I think it really brings us to the perspective when we just have the beauty of both worlds, and we can just really create effective partnerships in this payments ecosystem, especially with the platform model and open platform. And if you take the example of Stripe or similar companies already, and these are platform businesses, and not only these guys, also some other companies like small fintech players, but also big businesses are following this path. So Andres, when you have the perspective from the emerging markets, so what will be the winning strategies or the maybe new acquiring models? So along the lines of consolidation versus just because, needless to say, payments is a fragmented word, very fragmented still.
Yeah, thanks for that. I think one of the key elements is coverage when speaking about emerging markets, and not only coverage, but having the local expertise in each of the markets. These markets are very dissimilar, one from the other. So it's super important for companies to be able to offer a one-stop shop solution, which covers, every market, right? It will be very difficult to cover every market, but having a very extensive coverage, cover every relevant payment method. But I think payment companies who aim or target this, they should also have another step, which is advisory, right? So it's super important when payment companies, particularly from an emerging markets perspective, to be able to offer a piece of advice when merchants are aiming to expand their businesses into these regions which are pretty much unknown to merchants, here in Europe or in the US. So I think, it's a combination out of these three that, would generate a good value proposition in general.
Yeah, thank you, Andres. And as I'm listening to our session and to our discussion, but also just starting from the morning, we are very much focused on consumers. And how about B2B payments? We haven't mentioned this. So how about shifts in the B2B payments? Are they more resistant to change or just the opposite? So maybe just starting from you, Nik, again.
Yeah, we are seeing a change and we're seeing growth. I think I read a study last week. I think that the compound annual growth rate is looking at 10% over the next 5 years for B2B because the market's changing and there's so many examples of that. I mean, one example would be the explosion of the gig economy. I mean, it seems crazy to think that Uber only started in 2009. Now they're part of the furniture, and there's many other providers as well, and that's really transformed how people view themselves. I think 3% of the US market today is so-called gig economy. That could go up to anything 40 to 50% as they as they redefine themselves. And the same for the creator economy as well, which will be a big driver of B2B. I mean, we all know the YouTube stories, the millions that get made by people playing with their toys. I think a lot of people increasingly see their creativity as a means to be able to earn and to monetize. So that'll create a whole load of new, more B2B type opportunities as well. And then in the more traditional side, companies, merchants will be looking to monetize their payment flows, in order to be able to, get a return in the best possible way by looking at their account payable file and working out which payments can go to which countries by which means locally. So we're seeing growth already, and I think it's only going to accelerate as the underlying market changes.
Yeah, thank you, Nik. Ralf, you want to add anything?
If I may, you mentioned the traditional players. We can also see growth in this area. And actually, I would even say that the B2B payment, the industrial players, they are adopting technologies that we know from e-commerce because the invoice payment were prevalent with regards to B2B payments for a very long time. However, it seems that large industrial companies now move into the same space with regards to payments, into the same space like merchants, because it's more comfortable for the user. So they stopped insisting on payment on invoice. That's actually a big opportunity for our industry, because obviously B2B is a space where credit cards and alternative payments and so on haven't been that strong in. But that's a big thing to have. However, they are also very demanding with regards to technology. So they ask for ISO compliances. ISO compliance. They need adoption. So it's not a standard thing to do doing B2B payments, because these companies are so demanding with regards to their own internal standards, for example.
Yeah. Thank you. So although most of you agree that payments are quite comparing to other industries, resilient, and there is no need for a recession-proof strategy, but there should be a winning strategy in the difficult times, especially in the crisis or poly-crisis times as we have today. So the question to each of you, just as to sum up or to wrap up our panel in a concise way, what is your winning strategy, or what is your advice, let's say, for merchants to go through these difficult and turbulent times? Laura?
Well, I think merchants do need to future-proof their payment strategies. So they are, most merchants, they start off just accepting MasterCard, Visa, Amex, then they might add a few others, Diners, Discover, then they added PayPal, and then they stopped. And I think they need to think about the vast array of payment options for themselves, the offering choice, looking at the future in terms of What's their wallet strategy? Who do they want to partner with? What about just walkout technology? What about invisible payments? How do they want to update their point of sale? All those things. So I just think that future-proof your payment strategy.
Thank you. Andres?
I'm going to try to keep it short, just for the sake of time. I think merchants should target to be global, but they should definitely localize their payment strategy.
Ralf?
I agree with that. Plus, it's not about choice. It's about convenience. Please have that in mind. Yeah, sometimes it's so easy to provide convenient payments. For example, we have customers using credit card and tokenization, but they always ask the merchant, the consumer, to use their card data again. That's not necessary. If I have a token, I can avoid the consumer to type in the card number again. So convenience is the key, because it's not the time to build any barriers. It's very important to have an easy flow, a very convenient payment that includes choice, of course. Yeah.
Yes. Thank you, Ralf. And last but not least, Nik, just to have a closing remark.
Yeah, sure. I mean, in terms of strategies, follow customers, continue to invest, be prepared to be agile with that investment, because the market's, changing. Manage cash flow, working capital. It's basic stuff, but it's obviously completely essential. Hire, retain, and train. Your best people. Your talent, and then be afraid of challenging conventions. I think we've done that today, and we've heard it this morning. And I think the industry won't just survive; it will thrive.
Yeah, thank you, Nik. And wow, what a great panel we just had. I enjoyed it very much. So thank you to our panelists. And my key takeaway will be future-proof strategy, including digital wallets, be global, but also act local and convenience, so customer experience, and then managing your cash flow and the working capital. This is the advice to merchants. Thank you very much, Laura, Andres, Ralf, and Nik. It was a pleasure to host this panel. The omni-channel strategy. So just big applause to all of our panelists.